Welcome in, everybody. And I'd like to thank you for tuning into Silver Stackers episode number 10. In this episode, or this installment, we're going to take a slightly different direction, as we first need to look at how Russia is shipping gold to the UAE, China, and Turkey on the backs of not just U.S. sanctions, but backlash that they face from around the world. We've got to take a look at the U.S. dollar currency index, how it exploded over 104.20, which is putting a lot of pressure on gold and silver. And our last installment, we talked about if we were patient, we would get a much better buying price on gold and silver, as I thought there was no way we could go parabolic yet, as I didn't think the USA was going to let the US dollar die just yet. And you can see we're having this parabolic spike as of now. So the importance today is we're going to take a look at the levels. We're going to take a look at the appropriate buying spots. And we're also going to take a look how the gold-silver ratios went back over to almost 85-1. I personally don't buy silver unless it's over 80-1. And then I'll trade it for gold when the ratio comes below 40-1. That's just a personal philosophy I've been using for the last several years. And then another thing we're going to take a look at is the gold-silver, where the limit buy orders are potentially at, or the spot orders are at today. So we'll take a look at that breakdown. So make sure you hit that like button. Share this to somebody who has an interest in commodities and or precious metals, because I'm going to give you a better understanding of what we need to do in this time of uncertainty. And it's been a real honor and privilege to do the first 9 episodes. We've been gaining a bigger audience as I go. So it's really a tremendous opportunity for all of us to learn together. Once again, I appreciate each and every one of you. I'm going to play the intro as you hit the like button, and then we're going to get into this hot and heavy. Good morning. It's 10:48 a.m. Eastern Standard Time on this Thursday, May 25th, 2023. I'm XRP Future Millionaire, and I reside in the great state of Michigan. Now, you won't be seeing this update until 12:22 p.m. Eastern Standard Time, as that's the time I like to release my Silver Stacker updates. I like it right at the midday, and I have a thing with the number 222, as some of you know who watch my channel. So I want to start here. Russian gold shipments to the UAE, China, and Turkey. So ingots of 9999 or 9999% pure gold are placed in a workroom at Krasnodar Precious Metals Plant in Siberian city of Krasnoyarsk, Russia, January 31st, 2023. London, May 25th. Reuters. The United Arab Emirates has become a key trade hub for Russian gold since Western sanctions over Ukraine cut Russia's more traditional export routes. Russian customs records show the records, which contain details of nearly 1,000 gold shipments between February 24, 2022 and March 3rd this year, reveal the names of over 100 non-Russian companies that have handled Russian gold since Western markets banned imports from Moscow. The shipments in the records supplied to Reuters by a commercial provider may not cover all exports in the period. Blah, blah, blah. So London, according to the customs records, a handful of Russian shipments arrived in London after the Ukraine war started, but before Western import bans kicked in. U.S. bank JP Morgan was sent 72.4 kilograms of gold worth $4.5 million in shipments in March and April last year, while Swedish security firms Loomis was sent of 97.4 kg worth $5.9 million during March, May, and June. Both companies operate precious metal vaults in London. The custom records for the shipments to JP Morgan and some of those to Loomis named French bank Société Générale as the recipient. A source close to Société said while the bank cannot comment on specific client matters, any transactions of such a nature were debt settlements arranged prior to the war in Ukraine and would contain gold bars made before March 7, 2022. When the London Bullion Market Association banned Russian gold. A spokesperson spokesperson for JP Morgan declined to comment. Loomis said it does not conduct business with any sanctioned parties or sanctioned goods and does not buy or take ownership of goods, only transports them for clients. Now, the UAE, the record shows the biggest handler of Russian gold exports to the UAE was Temis Luxury Middle East, a Dubai subsidiary of French logistics provider Temis Luxury, which participated in the import of 15.6 tons, valued at $863 million between February 24th and 2022 and March 3rd of this year. It was followed by Transguard, which is part of Emirates Group. They bought 14.6 tons worth $820 million. And then we go down a little bit farther because I'm not going to read all of this. Another 17 non-Russian companies were each involved in transporting more than a ton of Russian bullion to the UAE between February 24, 2022 and March 3rd. And then if we go to Hong Kong, they received 20.5 tons of gold worth $1.2 billion. Turkey received no individual non-Russian company shipped more than a few tons of gold to Turkey. 8 took part in the import of more than 1 ton of Russian gold in that year to March 3rd, 2023. The LBMA, at least 2 of the companies named in the customs record are members of the London Bullion Market Association. V Power Finance Security is a full member of the Transguard and affiliate member. So this is very interesting. So it says the LBMA said members and accredited refiners must comply with its rules, which include complying with US, UK, and EU sanctions against Russia. It said it would investigate any allegations that the LBMA members handled Russian gold and could rescind the membership of any companies that had done so. So it sounds like a lot of mumbo jumbo here, a lot of back end dealings going on, and that should be no surprise to anybody. So let's go into the charts, and then we're going to go into where are the stops today with gold and silver. I always like looking at this stuff, and I thought maybe you guys would like to see where a lot of the key prices are likely targeted. But first, I want to go into the charts, because I want to show you the gold-silver ratio and why it's a tremendous time right now with the DXY bouncing as the DXYs come all the way up, and it looks like it's on an inverted head and shoulders or a W reversal now as it's put in a nice W. I think we're going to come up to 105.30, but I'm more comfortable saying we probably need a rejection at 106.847, or where X marks the spot. We might actually have to come all the way up here and get rejected up in that formation breakdown. So that's what could be happening here in the immediate short term with the DXY. And when that happens, it's not that gold and silver becomes less valuable. It's just that the US dollar holds more weight, which means it costs less to buy gold and silver. That's why it's always in your best interest to buy when the US dollar is spiking. Right now, gold is down to 1946. We've had a fantastic drop off. As we talked about the last time I did an update, we were right around here in silver stackers. Where were we at? I know we were pushing up here. It was the end of April. I know we're around 2050, and we talked about our top peak here right now could be close to 2100. But I said we're not comfortable in saying we're coming up any higher. In fact, I thought we would have to come down to the 200-day around 1880, if not lower, because I just didn't think the US dollar was ready to die yet, which means that gold and silver can't just take off yet. I still think it could come down to, and if we do this properly, this cup we came down to or broke around here at 1840, and then underneath that at 1796. Those are the 2 areas where I pay the most attention. You break down through this W down here, and it could be a long way down, but I'm not sure we can come back down to 1430, but it's possible. It really is possible. You know, if we broke down some support structures. But what I'm saying is it looks like we're going to have a healthy retracement here if the US dollar is in fact going to have this nice little push, and better buying opportunities are upon us right now. It's better than 2050. Now, will we come all the way down and retest the 200-day in the daily, in the weekly, at 1740? Well, that can only be determined in the daily time frame. And we're going to find out a lot, ladies and gentlemen, if 1, 1882 holds, or 2, that 1840 holds. If those break, we're coming back down sub 1800, unfortunately, or fortunately, depending on how you're looking at it. With silver, even more of a dire situation is now it's below 23, as we hinted at when the update started. We're about to have a bearish cross in the daily, which in the gold, you can already see in gold, that bearish cross hasn't technically come down as far as silver, so we're a bit behind. So just pay attention to that. With silver, we're at 2286, and that bearish cross is all but formed. We talked about how we were topping out on this pattern formation and how we had to come down more than likely to the bottom of this uptrending support, and it might bring us down below $20 again at 1950. This is the breakout area. We need to get on top of here and hold it at $24 plus to push out to the next level. Right now, though, with the US dollar doing what it's doing, and up here is the very big on the top of a breakout. But with what the US dollar is doing, it gave us all the optimism in the world in Silver Stackers episode number 9, why I thought it could come up back down below $20. But ultimately, we would find out when it came down to the daily time frame support, which it's at right now at that 22.79 area. We get a rejection. If it comes back up and we get rejected at 23.50 approximately, we're more than likely coming back down sub $20. So pay attention to that with silver, as it gives us a great opportunity right now in the gold silver market. And the gold silver ratio is at that 85.03 to 1 right now, which is spectacular. We had this overextension bounce where I told everybody this could be the reversal spot, because I didn't think, again, with the way the patterns were forming, that this was ready to just come back down and give us a great ratio back to gold over silver. So I thought we were going to bounce back up here and possibly come all the way back up to 96 to 1. It's possible. I'm not saying it's guaranteed, but if we're back up here as we use this as a bullish bounce, it's possible we come all the way back up here. Do I think we're coming up to 120? Likely not. But that's a destination we've never come back to since 2020. But ultimately, I think we're looking for a rejection to start making this come back into the appropriate ratio between gold and silver. But, that's just my understanding of what's going on. If we get a rejection, especially up here, would be big. Or if we break back down and come through the 78 to 1. But right now, the gold-silver ratio is looking a little bullish here. So just pay attention to that. Commodities, looking a little shaky. I talked about B2 gold, where I would be interested in adding some to my to the arsenal. We had to wait until we come back down here, though, because if the 200 breaks at 374, to me, it seems like we got to come back down to that $3.10 level. I really believe that's likely what's going to happen. Yes, we could end up bouncing bullish, but to me, it doesn't seem like it's ready yet. We got to confirm this uptrending support around $3.10. And then for Fortuna Silver Mines, I had a lot of people ask me. That's why I'm going to dip into this one. I don't think necessarily that this is even a close to the right time to buy, because I don't believe this uptrending support on this formation is going to hold at 325, 320. I think we're actually going to come back down, and we're going to try to validate whether or not we have to hold this or we're going to come down through channels. I think with Fortuna Silver Mines, if this continues this death cross, I think we could be looking sub $3 and possibly come back down to this $2.59 area and maybe try to test that area. I really do. Or we could come and see if this channel breakout is actually official, and we could come all the way down to $2.15 or 20 cents. So that's what I'm looking at with Fortuna Silver Mine. So I think better days are upon us for buying. Whether you already own some or you're adding to it, I think we've got a tremendous opportunity coming. Same thing with Barrick Gold, same thing with Kinross. We've got lower lows coming, but on Silver Stackers episode number 11, when we get close to the time to buy those, when I believe that we're about to reverse again, I will do a spectacular update on that. Now, I would like to end Silver Stackers episode number 10, by hunting where are the stops Thursday, May 25th on gold and silver. So below are today's likely price locations of buy and sell stop orders for the active COMEX gold and silver futures market. We're going to take more of a look at this as we do these Silver Stacker episodes. The asterisks denote the most critical stop order placements level of the day, or likely where the heaviest concentration of stop orders are placed on this day. See below the detailed explanation of stop orders and why knowing beforehand where they are likely located can be beneficial to a trader. So June gold buy stops 1987, 2000, 2012, 2020. Sell stops 1954, 1950, 1935, 1925. So we're heading in that trajectory right now for the June sell stops. So 1925 is where we're likely heading, and we're going to see if it can hold there. We already went up to those 2000 levels. So, and then with July silver, we're looking at buy stops 2365, 24, 2418, 2439. The sell stops are 23, 2275, 2250, and 2225. So we're heading towards those. So stop orders defined. Stop orders in trading markets can be used for three purposes. One, to maximize a loss on long or short positions. Protective stop. Two, to protect a profit on an existing long or short position. Protective stop. Three, to initiate a new long or short position. A buy stop order is placed above the market and a sell stop order is placed below the market. Once the stop price is touched, the order is treated like a market order and will be filled at the best possible price. So we're looking at around $22.25 for silver for that low price. $19.25 for gold, and to see if it can push through those levels. Most stop orders are located and placed based upon key technical support or resistance levels. So that's just what I wanted to give you. I appreciate everybody tuning in to Silver Stackers episode number 10. I know we took a slightly different route, but all is important. I'm trying to show you each and every installment how to get more comfortable trading precious metals and having a basic understanding of where and when to buy them, and along with the commodities. Make sure you hit that like button, as it will greatly help push me through the analytics, and share this to somebody who has not seen an installment of this series. Stay blessed, everybody, and I'll see you on the next installment of Silver Stackers.